now we are here to talk about how to manage your up and down in a very volatile environment, and thankfully we have a crop insurance program. Jon Strohl is with us. He's the Vice President of Crop Insurance for Farm Credit Illinois, the VP for Crop Insurance right here in the Effingham office, and he has been here for 4 years. Let's give Jon a hand. Jon?
All right, thank you, Jeff. Like you said, my name is Jon Strohl. I work out of the Effingham office. I have the privilege with working 2 other agents there. One of them is Kyle Coons, who, as you can see, didn't draw the short straw to be up here today. The other is Megan Moses, who just had her first child yesterday. So we'd like to wish her congratulations. So there's a farmer in a field right before planting season. He stumbled upon a genie lamp. He grabbed the lamp, he rubbed it, and out popped the genie, and the genie said, well, I'll give you 3 wishes. And the farmer said, well, I want $6.50 corn and $15 beans. And he said, your wish is granted. So the farmer put the genie lamp back on the shelf, and he went to planting. Got his planting done and saw the lamp again and got it down and rubbed it and said, genie popped out and said, well, you have 2 wishes left. He said, well, I want $6.50 corn and $15 beans. The genie kind of looked at him puzzled and said, okay, your wish is my command. He put the lamp back on the shelf and got everything ready. And right before harvest, he got the lamp down one more time, rubbed it, and the genie came out and said, okay, now you have your 3rd and final wish. What do you want? And he said, well, I want $6.50 corn and $15 beans. And the genie looked at him and goes, you have wished for this every single time. And the farmer said, yes, but now I'm going to sell it. So with that in mind, this is how your crop insurance could work for you. Depending on your APH, depending on your yield history, you could have, in this example, 75,000 bushels guaranteed. What that allows you to do is to have that number in mind on how many you could sell depending on where the market goes. We're not here to tell you when to sell, just knowing that you have that safety net to sell. As the market rises and falls, depending on your risk tolerance and your levels, you could sell 5,000, 10,000, and just know that guaranteed number up there stays the same, and you could segment it throughout the year however you want to sell your crop. And that's where you could work with guys like Jack and figure out what that is for your operation. So if we go back to our farmer who had the genie lamp and he had actually sold the first time on his wish and he had 2 more wishes, what would he have wished for? Maybe good weather, high yields, good profit margins, strong commodity pricing, or strong business partners. That's what we're here for, sort of. Maybe you probably would have wished for cheaper interest rates, but that's not up to us as well. So how that works here with Farm Credit and your crop insurance team. So what we're here to do is help you mitigate the risk for the 2023 crop year. You can do everything right, everything within your power, and still end up a little short. We're here to lessen that risk and mitigate it as much as we possibly can. So good weather and high yields. One change going into 23, if you can see here on the map, the yellow up in the top right, the plant date used to be April 20th on beans, the early plant date. Now that is April 10th. As we move south through the state, you can see in the green, it used to be April 15th. Now that date is April 5th. So that allows you to go out a little bit earlier and plant those beans if you so desire. If you look at past yield history over the last 3 or 4 years, you can see that's not a bad plan depending on where you're at and how your operation is set up. So kind of a synopsis here. Corn plant dates did not change. They're still in the top, April 5th for the earliest, June 5th for the final, April 1st for the middle, June 5th final, and same April 1st on the bottom, but May 31st on the final plant date. Replant. Replant is one option several producers take out. It's an extra endorsement that allows maybe take that risk or take that pressure off you to know if you go out the first time and you have to redo it or maybe spot in beans that we are here for you to help that out. The biggest thing to remember is before you replant to call us. Call your Farm Credit crop insurance agent. We will turn in a notice of loss. An adjuster will call you, and at the very least, you want to talk to them before you do anything. Don't just go out and ask for forgiveness later, because at that point, our hands do become tied. We want you to get that loss in. That way you get your money you deserve, because it's not cheap to go out there and do it. regardless of free seed and whatnot. So that coverage does extend for corn and beans. It pays at the very first acre, and it does have options where you can extend those early plant dates up to 2 weeks ahead if you feel like you really want to go out and get started and get going early. The other option is you can insure 100% of that coverage and you pay the premium on that, but you also get the indemnity on that. So if you farmed on shares, you'd be able to take that whole cost. Then you'd get the whole check. Another program expansion for this year is PACE. If you remember, PACE stands for Post-Application Coverage Endorsement. In 2022, it was only available on the highlighted counties there on the map. For 23, it is expanding to the whole state of Illinois. So that is now an option that is available for everyone. What it is it covers the window of corn from V3 to V10. It is not a premium credit, unlike some other additional endorsements, but is on non-irrigated corn only. So what that allows you to do is if you split shot your nitrogen and you don't get your second pass on, there could be a payment there, but how it works in conjunction with your revenue policy, it won't pay double. It'll only pay on the one, and then the other one will kick in after that one is done paying out. Make sure to talk to your farm credit crop insurance agent with more questions. We'll move to crop, hail, and wind, which becomes a very, very bigger topic every year with the volatility of Mother Nature and her increased, severity on the crops. You can purchase crop and hail after the March 15th deadline. The biggest thing is you can call your farm credit crop agent, get that policy put in place, and know that you're safe and covered. There's several different caveats to that, though. You need to know how it works, what it covers. Is there a deductible on that? Is it a disappearing deductible? Does that wind include green snap? Is that an extra endorsement? Just make sure you sit down and talk with your farm credit agent and go over these options to see if it fits with what you're doing. Another big thing we find out every year is hail. Hail is more than just hail. It covers stored grain, covers fire, covers grain in transit, vandalism, and then fire department. So if your field catches fire, either you set it on fire or your neighbor sets on fire, hail will come in and kick in on that. If your combine catches on fire, the grain inside the grain tank is lost, your hail insurance kicks in there. You're hauling your grain to town, truck rolls over, it'll help pick that grain up and pay for any unrecoverable grain as well. So again, hail is just more than hail. It also extends to your farm as a total liability blanket per se of any grain you have stored on farm as well. So just know there is a little bit more to it than just the hailstorm came through and that's what I get paid on. Like we said with the wind, there's wind, green snap, and extra harvest. The biggest thing with these is wind coverage could kick in twice. You could get paid when the windstorm comes through. They do an assessment. They pay you a percentage on that. You get out there in the fall and you notice that stuff is all goosenecked one way. You have to harvest it going one way. It's just a real bear. Call again. Get us. We'd get the adjuster out there. There could be what they call the extra harvest expense, which is equatable to a pain and suffering payment that you get that corn and get it harvested. You could still have really good corn, which would not kick in on the revenue side, but you could get an extra harvest expense and get that paid for as well. The biggest thing is just call. Let us know. We get the adjusters out there. We get them looking at it. The worst situation we could have is if you call us after you've already harvested it all and there's none there for the adjusters to look at, and then there's a payment that you missed out on. We have several AIPs we work with. One in particular has been using the drones, which works out really, really well. They can get a good view on everything and get a better take on what's going on and the damage out there. Like we went over, just understand, went over the deductibles. Is the green snap included? How does the extra harvest work? There's a lot of moving parts within your policy that will help you that maybe you're not aware of. Again, get with your farm credit agent and they will go over this with you. So we've mitigated the risk for 23 by talking about good weather, high yields, commodity pricing, and now we're going to talk about profit margins, which is the reason you all are out there every day. So there are additional coverage options available. One of them, as we go over here in just a minute, is the double cropping written agreement for all of Illinois now, livestock risk, and the crop insurance investment. So the additional coverage options you can buy on top of Your regular RP policies is SCO and ECO, supplemental coverage option and enhanced coverage option. Supplemental are determined by your policy, but triggered when the county produces less than the coverage level of 86%. So essentially, you could have an 80% policy and buy up to that 86% level, have that 6% gap, but it's covered off of your yields, but on a countywide basis. The biggest thing to remember on SCO is you have to take PLC at the FSA office. That is the big takeaway. If you take away anything from this, you have to elect PLC at the FSA office, otherwise there will be a penalty incurred if you elect ARC. Make sure that that's something you do if you do take SCO. ECO works very similar. I refer it to as SCO on steroids. It takes you to 90 or 95%. It'll get you up just a little bit higher. It's also federally subsidized like SCO, but the PLC factor does not come into effect with it. So that's the biggest differences with those. Here's how it works. If you have our grain silo here, for example, as you see it fills up. Depending on where you fall in this chart here, the revenue could be 50 to 85% on your base policy. You can layer that on top with SCO. So wherever that falls, wherever that level you decide is comfortable for your operation, you could bridge that gap up to 86%. And if you feel like that's still not enough for you and you want to keep going, you can bridge the rest of that 90 or 95%. Essentially, if you want to look at it in the inverse, you're buying down your deductible. Now you have a 5% deductible instead of, if you were at 70%, you have that 30% deductible from the very top. So it's just based upon your operation, what you're wanting to do, how you're wanting to use your crop insurance. Are you wanting to use it forward market? Are you using it for another 2012 situation? Are you doing just you sleep better at night? That's all stuff we like to ask you, come into a play when we're going over your policy and doing your renewals every year. There is also the option you can leave the SCO out. You can have a gap in there. You can leave that gap and skip above and cover the top part. It can be custom made, custom tailored per se for however you're wanting to do your coverage. So in that case, if you just take the 80%, you have the 6% gap, that leaves you 14% of the top versus the 20. In that example, you're just buying it down, moving that deductible apart and see where you want to go. FSA, I'm sure if they haven't called you, they're going to call you, get you in there and make your elections. This changed several years ago where you can now change your elections every year. You used to have to do it on the Farm Bill basis. Now you can every year re-elect what you want to be in on a PLC or ARC. How PLC works, just as a reminder, it's against drop in price only. The USDA sets the reference prices, 370 corn, 840 soybeans, 550 wheat, and the payments on 85% of your base acres. ARC is a drop in revenue. It's also an FSA area-based program, and you have the 5-year Olympic average over the marketing year. The yield is rolling with that, and the payments, again, are on 85% of the base acres. One big change that did come out is the blanket written agreement for double crops. So what this allows you to do, if you're in a county that's not approved per the RMA to ensure your double crop soybeans, you can now do this. You can have your farm credit agent fill out a written agreement, get those double crops insured. You can see here on the map, the green without the check marks is the counties that are insurable for double crop beans. There's several different caveats to that as well, though. You have the option to put them with your first crop beans. You have the option to keep them separate from your first crop beans. We need to know how you want to ensure that and how you want it to be covered if there is a claim. As you see, the check marks are the counties that are not insurable for double crop beans. If you do this blanket written agreement, that would allow you to insure them. One of the big things, though, is on that blanket written agreement, you would have to throw them in with your first crop beans. Just know if you're in a county that does not insure them, if you do the written agreement, in their eyes, a bean is a bean. They're putting them all together. So make sure you know what you're getting before you just sign up and say, yes, I want to insure my double crops. Because if your first crops make 70 and your double crops make 10 and you think you're going to get a payment, you're going to be very sour when they tell you, no, you're not. So we don't want that. That's something we don't want to have. So just make sure you talk with your agent and know what you're getting before you buy it. Let's see, final plant dates on the beans, April 10th on the earliest, double crops right there. Not new, but new because of now it's more affordable, is LRP, or livestock risk protection. It's subsidized insurance for cattle and hog producers. It's available on fat cattle, feeders, and swine. So what it is it allows a producer to set a floor for your livestock. We talked about puts and calls earlier. LRP is essentially a subsidized put option. It allows you to set a floor that you desire. You can look out as short as 13 weeks, as far as 52 weeks on the fat cattle side, and look at the pricing and say, yes, I would like to get that price locked in and know that my operation would at least make this. It's very similar to corn and beans. So corn and beans, you set a spring price for your discovery, a fall price for your settlement, and those are what you're using to determine an indemnity. On LRP, the thing is that price changes every single day the market trades. So there is a lot of options to look out there, and it's definitely come down in cost because of the government increasing their subsidized level. It's not necessarily a policy to make you more money, more profitable, but it's going to limit your losses as you sell your livestock and get that put in. The big instance on this was in the COVID year when you couldn't hardly get rid of fat cattle and the packers weren't able to take them. Something like this would have helped protect your bottom line where you're not just giving away your animals. This is something, if you have want more information on, contact your farm credit crop agent and we can put you into a position to talk about this. The biggest things to know are target weight, target date, your break even. Are you selling feeders at 900? Are you selling fats at 14? Are you just backgrounding from 2 to 4? There's a lot of different options with this product. Biggest thing is here, get with an agent, get an application filled out, get an application signed. There is no cost to sign an application. An application is essentially a gateway for our livestock agent to work with you and get you the quotes in your hands and get you that information so you can make an educated decision. There is no cost to sign an application. The only time a cost is incurred is when you elect an endorsement and decide that, yes, that is the date I want, that's the weight I want, and then the premium attaches. The other cool thing is the premium is not due until 30 days after the endorsement. So no upfront money, no margin calls. It's a really, really, really good product. Again, contact your local farm credit agent. We can get you hooked up with the right person to sit down and talk about this and go over it more. So as you saw in 22, there was a lot of premium drivers that increased your premium. If you got your bill in the fall and you noticed it was very, very high, there's a lot of reasons for that. You were insuring a lot more dollars out in your field, added a lot more bushels, so you had a lot more on the line, which essentially correlates to a higher price. One of them was your APH. Going into 23, in certain instances, that 2012, that yield exclusion will kick off. So you could see an increase again, or it could go down a little bit depending on your APH and your history and what you have involved. But that was a big one why premium went up. Again, the endorsements, TA, YA, YE, YC, QL, and PF, these are things that are attached to your policy that if they work and help your yield and get you a higher guarantee, you pay a little bit for them. But if they don't kick in on your database, you don't pay for them. So they're there to help you. Another reason premium was up in 22, depending on your unit structure. We've seen a lot of people change, not necessarily on the soybean side, but on the corn side where they would take and put their, what we would call basic unit, where all their 100% would go in a bucket, their shared would go in a bucket based upon landlord. This obviously drives the premium up, but it also protects them because usually some of that shared ground isn't in the best possible scenario or best possible area to grow. It all depends on what you want to do and how you want to structure your policy. Another thing that drove premium, again, was your coverage level. Obviously 85% is going to cost a lot more than 50%. And then the volatility. So we set the cost of crop insurance during the month of February. The last 5 days is where this volatility comes into play hugely. Those last 5 days, that volatility level, if it's going up, down, up, down, up, down, your premium's going to go up. So that is another reason why we saw that trend up significantly in 22. So we've checked off here, we're down to our last one, which is the strong business partners. And that's where your farm credit crop agent and your farm credit loan officer come into play. We're here to help you guys. If you're not successful, we're not successful. You're the reason we're still able to have a job. and we really do appreciate that. Some big things going through for 23 that we've seen, especially in our office. One of them would be added land, making sure that's covered correctly. Another one would be database reviews. We go through 10-year histories and make sure everything's the way it's supposed to be. And then a lot of it we're seeing is the next generation when that transition is happening. So if father has a policy and now son's going to start to take some over, we want to make sure that your father's history is transferring to the son, and we're not losing all those good, hard years of good yields, and they're just going out the way. So make sure that history gets transferred correctly. Again, sit down with a farm credit agent. Production is going on now, from now until the end of April. Some key reminders on that is support what you report. So on crop insurance, we divide your production records into two categories, soft records and hard records. Soft records show where the production comes from, combine monitors, yield monitors, grain cart scales. That's examples of what we would consider a soft record. A hard record is showing where the production went. Settlement sheets, elevator tickets, as such, bin measurements, those are what we would consider hard records. And those are what you would need if there was any sort of audit or any of that stuff to back up what you said you made. So here at Farm Credit, you can see where these BioStars are. Those are our offices. We cover the southern 60 counties. And between everyone working in crop insurance, which again, that's all we do is crop insurance. That's our bread and butter. Not that we don't care about your home and your health and your auto, but we want to protect your livelihood, which is the crops. We have 230 years of crop insurance experience, 33 full-time crop insurance professionals here to work with you in mind, and there they are. Another thing we work is we're a co-op. So with that in mind, you're an owner. So, that started several years ago. You saw that effect with patronage, the patronage payments that are being issued out. We're more than just crop insurance. We do have several good options on the loan side. Upfront interest rates. The Fresh Roots program has been a spectacular program. If any of you are lucky to participate in that. We do learning workshops where we pay members to attend. We're investing in the rural marketplace dollars, putting money out there in 4-H, FFAs, farm groups to help the next generation learn what you guys have built up and why you did what you did. And again, cash patronage. That's been a huge success. I would like to take this last minute, if our insurance partners would stand. These 4 companies we work with, which allows us the flexibility to tailor-make the insurance options for you. If they would stand, we work with RCIS, Great American, AgriSampo, and Crop Risk Services. These folks here are responsible for the food you're about to eat as well, so if you get a minute, tell them thank you. We do appreciate it. If we could just get a round of applause for them. Thank you very much. With that in mind, that's all I have. Again, if you have any questions, find your Farm Credit crop agent. We'd be happy to help.